What's up, guys? Today in this video, we are going to discuss Chamath Palihapitiya's investing strategy, break down his portfolio, and dive into his future plans. Chamath's investing strategy is based on compounding interest over time, just like Warren Buffett's. A part of Chamath's strategy was controlling his own emotions. He changed his mindset by humbling himself and putting in the work no matter how boring or dull it was. He says your patience is really put to the test. Figure out what your behavioral advantage is. Besides controlling emotions, a main part of his strategy is to look at companies that are about to scale and are de-risked. He looks into markets that are in their early stages and only have execution risk. They are past the market adoption risk, which means they are past the stages of getting their first customers, gaining momentum, and pricing their products reasonably for their target customers. Another part of his strategy is finding the disruptors. He invests in technologies that are disruptive in their fields, for example, Tesla. Finding unconventional markets is also a part of Chamath's strategy. Unconventional markets have no competition. One of his examples of this is climate change. No one has solved the problem yet, but if someone did, they would probably become a trillionaire. Some of his other rules are buying companies he thinks will grow 10 times in the next 10 years. Now on to Chamath's investing portfolio. Chamath is primarily invested in tech startups. He founded his own fund called Social Capital in 2011 after he left Facebook. Before starting Social Capital, Chamath invested in companies like BumpTop, Playdom, Palantir, and Pure Storage. Back to Social Capital. Currently, Social Capital is invested in approximately 74 companies. A lot of these investments are private, so the general public cannot invest in these companies. The major companies Chamath is invested in that are public include Tesla, Slack, Opendoor, and Amazon. One of Social Capital's acquisitions include Hustle, which occurred in 2020. Most recently, in January 2021, Social Capital and Sophie merged together. If you know who Chamath is, then you probably know he is the king of SPACs. SPAC stands for Special Purpose Acquisition Companies. These are non-operating publicly listed companies. The purpose of SPAC companies is to identify and purchase a private company. It is a faster way to take a private company public than an IPO, and it is well suited for high-growth companies that are focused on future profits rather than current profits, which is a limitation of a traditional IPO. Some of Chamath's SPAC deals are Virgin Galactic, Opendoor, and Clover Health. He plans on having more SPACs to follow. Some more of Chamath's future plans of investing include space. He also believes climate change will be the largest economic opportunity in our lifetimes. Thus, he is spending a lot of his time researching clean energy. As you have seen, Chamath mostly focuses on investing in technology and plans to increase his number of SPACs. This diversified investment portfolio has given Chamath a net worth of over $1 billion, which will continue to grow as the companies in his portfolio mature. In fact, Palihapitiya has been labeled the next Warren Buffett several times, and the future will show us just how close Chamath can come to the legendary return that Buffett has posted over the better parts of the last century. Thank you so much for watching. If you enjoyed this video, please hit that like button and consider subscribing for more business content.